So let me quickly tell you about a couple strategies that I think you ought to think about that we advise our clients for people who operate in the District of Columbia. The very first is when you set up a business, and this can even apply even if you've got a business already set up, you need to give attention to what type of entity, how you want to operate. The different types of entities, and I should mention there's a resource that's back here, has a fabulous outline, and included in that is choice of entities. But they are quickly sole proprietorship, partnership, limited liability company, and corporations, which can be S corporations or C corporations. If you're already set up, it's fairly easy to change from one to the other, except from a corporation to the other types of entities. A sole proprietorship is very easy to set up. However, there is unlimited general liability. We very rarely recommend that our clients operate in this fashion. Also, the Internal Revenue Service has come out and said most inaccurate tax returns come from sole proprietors. So you're almost assured of getting an IRS examination. Not every year, but I bet you over the next 5 or 10 years, you'll be examined one time if you operate as a sole proprietorship. LLCs, clearly the predominant form of ownership that we're seeing over the last 10 years. It's a very flexible structure. It allows people to have that liability protection. It's very common in real estate development and venture capital, which we're seeing a lot of. It allows for people to get basis for tax-deferred distributions from the entity. It allows for flexible allocations of income and loss items to the various members. A lot of times when you set up businesses, you'll see one person capitalize it with funds, the other person put in their sweat, and it helps accomplish the objectives of the owners. S corporations, again, another pass-through entity where the income taxes are paid by the owners. This is a little bit not as flexible as a partnership. However, we have found certain clients do like this because it does allow for compensation to be paid to the owners through the form of W-2 as opposed to distributions or guaranteed payments that come from partnerships. And when you're paid as a salary, there is withholding required. And that's much easier for many individuals to have their income taxes paid through withholding versus estimated income tax payments. And for that simplicity, people like that. C corporations is the one type of entity that pays its own taxes separate from the individual owners. The problem with that is when the eventual profits come out to the owner, there's a double level of tax, whether it be through dividends or sale of your business. The actual tax penalty associated with that in today's tax rate structure is about a 12% cost of the cumulative income that you've earned in your business. So, choice of entity, I think, is very important for you to consider.